Today, we're zeroing in on the Grok Trade stock market summary for April 30th, 2025.
That's right.
You sent this over, and basically, our mission is just to pull out the key stuff, what happened in the market.
Yeah.
The economic data, crypto, metals.
Get you up to speed quickly.
Yeah, exactly.
So we've got Grok Trade's take on the S&P, NASDAQ, Dow, Russell, the usual suspects.
Right.
And importantly, their view on those big economic data points that hit today, plus Bitcoin, gold, silver.
Okay, good. So the stock market itself sounds like it was a bit of a roller coaster. Started down, then recovered.
Yeah, definitely volatile. It gapped down at the open, saw some selling pressure early on. But then mid-morning, things really shifted. We saw a pretty strong rally kick in.
And that shift,
Yeah.
Grok linked it to the economic data coming out.
Absolutely. That was the catalyst. The core PCE figures, personal income, personal spending, those were the high-impact releases. As soon as that data hit, you saw sentiment turn, and the market started climbing back. It shows how reactive things are right now.
Interesting. So even with that early drop, the S&P 500, the SPY, and the NASDAQ, QQQ, they finished flat, erased all the losses.
Pretty much, yeah. A strong recovery intraday. Grok noted the NASDAQ, the QQQ, specifically ended up right around its 50-day moving average.
Okay, the 50-day, why is that level so significant? What does that tell us?
Well, the 50-day moving average, it's a key technical level. Lots of traders watch for short to medium-term trend direction.
Oh, okay.
So bouncing off it can be seen as bullish, suggesting buyers stepped in. Closing right on it, though, kind of leaves things hanging.
Ambiguous. Like, is it support or is it about to break?
Exactly. It means the market's sort of undecided right there, at least for the NASDAQ in the short term. Needs confirmation one way or the other.
Got it. Now, not everything ended flat. The Dow, the DIA, actually gained, right? But the Russell 2000, the small caps, went down.
Yeah, that's a notable divergence. Dow up about 0.3%, Russell, the IWM, down nearly 0.6%.
So what does that kind of split usually suggest? Bigger companies doing okay, smaller ones struggling?
Often, yeah. When you see the Dow, which is full of larger, more established companies outperforming the Russell 2000, it can sometimes signal a bit of a defensive move by investors. Maybe, favoring perceived stability over the higher growth potential, but maybe higher risk of smaller companies, especially when there's economic news swirling.
Okay, that makes sense. Bit of risk off, perhaps, even within the recovery. Now, the financial sector, XLF, also stood out in the summary.
It did. That's a really interesting chart right now.
Grok mentioned it closed above a key resistance trend line again, second day in a row.
Correct. And similar to the NASDAQ, it's parked right at its 50-day moving average as well.
So financials are also at a critical point then.
Absolutely critical. You've got the potentially bullish signal of breaking that trendline resistance.
Right.
But it's immediately running into another potential hurdle with the 50-day MA. So is this the start of a real breakout for financials, or is it going to get rejected here?
Definitely something to watch closely then.
For sure. The next few days could be telling for that sector and maybe for the broader market too.
Let's circle back to that economic data that fueled the rally. The core PCE price index, personal income, personal spending. Why were these the big movers today?
Well, core PCE, that's the Fed's preferred inflation gauge, or one of them anyway. So markets hang on that number.
Okay, inflation focus.
Exactly. And then income and spending tell you directly about the consumer. How much are people earning? Are they still spending? It gives a pulse check on consumer health.
And the market liked what it saw.
Apparently so. The reaction suggests investors maybe saw the data as perhaps easing some inflation fears slightly, or showing the consumer is still resilient enough. Especially, Grok notes, in the context of ongoing trade policy talks.
Gotcha. Okay, let's shift gears. Crypto. Bitcoin.
Bitcoin BTC was pretty flat on the day, according to Grok, but the interesting thing is the pattern they highlighted.
Which was?
They called it a high base bullish trading pattern forming just below the $96,000 level.
High base bullish. Okay, break that down. What does that mean practically?
Basically, think of it like Bitcoin climbed up high, and now it's just moving sideways near those highs, consolidating. It's not pulling back much.
So it's pausing.
Yeah, kind of catching its breath. The bullish part suggests this sideways action could be building energy for another move up. If it breaks decisively above that $96,000 level.
Then we could see more upside. And maybe pull other cryptos with it.
That's the implication, yeah. A Bitcoin breakout often lifts the broader crypto market sentiment, so another area where things are coiled up.
Okay. And lastly, precious metals. Gold and silver. It pulled back a bit.
They did. Gold GLD down about 0.75%. Silver SLV down a similar amount.
After being near all-time highs recently, right?
Exactly. So Grok framed this not as anything too alarming, but more like a natural pullback. A breather, as they put it.
Just cooling off after a big run.
Pretty much. Working off some of those overbought conditions, metals have had a strong run, so a pause near the highs isn't unusual or necessarily bearish.
Okay, so wrapping this up then. A day that swung pretty wildly based on economic news.
Definitely.
Major indices fought back to finish mostly flat, but with some differences under the surface, like the Dow versus the Russell.
Right. And key areas like financials and Bitcoin are sitting at potentially pivotal technical levels.
And metals are just taking a pause.
Yeah. So lots of moving parts. I think what really stands out is how quickly that economic data shifted the market's mood.
It really shows that sensitivity, doesn't it? How everything's connected. Data, stocks, crypto.
Absolutely. And it raises that question, what does this kind of intraday whipsawing and the specific reaction to this data tell you about underlying investor thinking right now? Are they nervous? Opportunistic?
That's the big question to chew on, I guess. It's just one day's snapshot. But seeing how these trends play out will be fascinating.
Couldn't agree more.